All right, good morning, everybody. Welcome to another webinar here at Jesus and Lucci. So we do these Saturday sweep webinars for you every week, and we go ahead and roll into different topics every single week. Today's topic is going to be, more or less pretty simple here on opening and closing contracts in the options order flow that we see in the private Twitter feed as well as the Steam room. For most of you guys, this is going to be a little bit of a basic topic here, just to make sure you guys understand, that when you're playing options, these are contracts that you're opening up, right? And when you want to close, or when you want to sell out of these positions, you're essentially closing those contracts. And those order types are flagged before you actually, as you actually send your order. So, for example, if you want to buy, let's say, Netflix calls, you're opening up and going long those calls. All right, and sometimes people get confused because you're kind of going long a put, or you can go short a put. So versus actual stock, where the only two options are buy and sell. When you're trading options, you have four options, right? You have buy to open, sell to open, and then you have buy to close and sell to close. All right, so those four options orders are tracked, and we're able to use those order types to figure out if one of the large players that we kind of follow is opening up these contracts or closing up these big positions. So Jesus here is going to take it away with a couple examples, and then we'll close it up for some Q&A for probably around 10 minutes, around 11:25, 11:30. All right, man. So Jesus, take it away, man.
All right, good morning, everybody. And like Lucci said, I mean, when it comes to anything options related, can get very confusing. So I'm going to try to keep it as simple as possible and just try to elaborate on the point of what we do in the Steam Room chat and private Twitter to just make it easier for you guys to get a read on opening or closing transactions. All right, and basically opening, when it comes to reading order flow, like Lucci was given the example of when you put in an order. The problem when reading order flow, orders aren't labeled closing. So there's no way to know for certain if a player is opening or closing a position unless, for example, the trade is greater than open interest. Okay, and that's what a lot of people use out there, retail especially, who don't have access to the better technology. They use the size of the trade versus open interest to get an idea if an order is bought or sold. So, I mean, to give you an example, somebody can buy calls in, let's say, Apple, and it doesn't mean he's opening a new position and getting long those calls. He could have sold to open, in other words, sold those calls last month, and he's buying to close that position. So even though he's buying those calls, he's actually closing a position now. So again, and this is stuff that we try to take out of your hands in the Steam room, so it makes it as easy as possible for you guys to get a read. I'll give you a couple examples so you know. Let's start off here. We got Taser here, okay? And you can see here every single alert, okay? On the bottom of it where the dollar amount is, you will see opening and then give the exchange it traded on. So in other words, this Taser bet right here, we know was an opening bet, okay? The bet was greater than open interest. So just by this alert alone here, you can tell and know that this was an opening transaction, okay? And as you can,
You're saying we essentially do the work for them.
yeah, because Lucci, to be honest, this is work that, especially if you're looking for speed and in real time, this is stuff, unless you really have the experience in knowing what to look for, it's not that easy to tell.
Right.
Like I said, most people will just look as opposed to open interest. But here, you can see on the ZIOP up here as well, the dollar amount of bet, a sweep, and then opening, okay, multi-sweep. So that's an opening transaction. But let's look at one that was posted, okay, and that was actually a pretty sharp order that wasn't opening, okay, and a lot of people would have disregarded. And that's in this one here, LOW, Lowe's. okay? A $323,000 bet, decent bet, multi-sweep, and you see no opening labeled here.
Ah.
So this trade wasn't greater than open interest. Now, without giving away the secret sauce and, I mean, getting into deep detail, we can be here for 3 hours to tell you what I look for and this and that. Basically, what you will see is if we go back, that time of the trade was right here on low, okay? And you could see the volume spike come in. The stock had a nice reaction there. So the reaction in the stock was as the player bought the stock. But the way I mean, bought the calls, I'm sorry. But the way I simply look at it is, regardless if the player closed that position or opened it, it's still bullish. If it was a call seller, you know, it was a bearish player, and now he closed that position. So it's bullish. And obviously not as bullish as if he would open a new position. But this, in addition to many other things in what I look at, is a good idea that that block of calls, and it was a sharp bet, was bought on lows. Okay, so again, I don't want to go too much in detail because it can get very confusing. And I'm no option aficionado, I'll be the first to admit it, but this is how we just keep it simple for members. And, you know, something to look for would be the word opening at the bottom of the alert. And if you don't see the word opening there, it just means that that particular order was not greater than open interest. Okay, doesn't mean it wasn't a buyer, just wasn't greater than existing open interest. So, I mean, was that confusing, Luch, or did I drill that home a little bit?
No, that's good. That's good. That's good. And you know, it kind of just throws it out there that you know, these things are, once they hit the tape, these things are not immediately easy to tell whether a player is opening or closing these positions, and it takes a little bit of a digging, actually a lot of digging, and a lot of digging into the information to figure out you know, how we kind of go about this. So we hear a lot about rolling positions. We hear a lot about players. So you know, we'll see on your private Twitter feed as well as in the Steam room on players rolling out positions. So opening, or let's say closing out previous positions and then rolling to, let's say, a further expiration. Can you give us a little bit of insight on that one?
Yep, and that's another point why, you know, a lot of people like to use these unusual scanners or just scanners for big orders, any scanner in particular, and why they don't work. It's just not that easy, okay? And just quickly, I don't want to go off the rolling topic, but just back to what you were just mentioning, Lucci.
Sure.
A lot of people use, you know, whether it traded on the bid, the offer, to decipher whether it was bought or sold, and that's not necessarily the case. I see a lot of buying on the bid, or even more in between the bid and the offer.
Right.
And where, you know, if you use just that, you would never be able to tell.
Right, because
whether an order was.
oftentimes, like, these guys want to buy, you know, 10,000, 20,000, 30,000 contracts of a super illiquid option. There's no way they can sit there and get that order done by themselves. So they got to call down to the floor, and they got to find the contraparty. They got to find somebody else to take their side. So sometimes those, you know, sometimes those prices will be midway between bid and offer, because those spreads are ridiculous.
Yeah, exactly. And that's why, you know, like I said, one of the things you will see, and I've said it in the past several times, no exact numbers, but I would say probably 85% of the Wiseguy action flow alerts that go to private Twitter and in the Steam room, you will see some sort of reaction like this, okay, where a market maker's hedging and word starts to get out that a sharp order, you know, hit the tape, whatever the case may be, you will see this reaction, okay? And now to just translate into the other aspect that Lucci just mentioned, rolling positions, that's another thing that's very important to decipher on whether, you know, I guess the multitude of how bullish the transaction may be. Okay, and I'll give you an example. And we had one recently in the room, okay? Excuse me, IBM. We saw some big action in IBM over the past couple of weeks, all right? And a player came in and actually bought another huge block in IBM. All right, and instantaneously I could see, in the room on Twitter, people were getting excited about the order, but that what they failed to realize was that the player actually closed an existing position, okay, and rolled out that position into a further out strike. And you could see here, and this is the commentary as well that comes into the chat room, not into the private Twitter. And that's one of the benefits to the chat, obviously. But you could see here, IBM, another rollout, player closes 311, 140 calls, and buys 1,025 March 141 calls. So he closed out the 311 and just pushed them out and up to March 141 calls. Now, again, that's bullish because the player remains bullish on that name, but it's not as bullish as if he opened up a brand new position with that type of size. So, and there's no way to know or to see if a player's rolling unless you're digging into the flow, and these are things I do. When I see an order hit the tape, automatically I'm digging into the flow and seeing all the other transactions that took place, that particular day. And that's how you'll get an idea or get a picture of what the player is trying to do there. So, and again, you can see in the further commentary, IBM, that was the IBM dude we saw a week ago, now rolling out. I mean, we saw that block of IBM calls purchased about a week ago. He closed that and rolled them out. This one in particular was into October. And again, you can see the size there, 9,000 October 165 calls. Now, if you see that order in itself, you're falling out of the air. But again, a position closed, existing position closed, and rolled out further to October, and in my eyes, it's not nowhere near as bullish as it would be if you first saw this order without a rollout. Okay, right. And I think we have other examples here just quickly to show you. Here, a couple of them. International paper, there was some big action there. And again, this is all in the commentary. If you guys are trying to figure out, well, how do I know this stuff? It's difficult. Unless you have the experience and you've been doing this for a couple of years, there's no way, unless you have a feel, to really get a gauge on this stuff. But I just want to portray the picture that this is stuff we do in the steam room to make your job easier, as far as making a decision whether you should take action or not. And here, international paper looks like a big April 39 call bet as well, but most likely rolls out from the 35 calls that we saw purchased a couple of weeks ago. And XOP as well. March buyer, but may roll out from weeklies. So again, anytime I feel that a position may be rolling out, I, as fast as possible, automatically will offer that commentary and analysis into the room so you guys can make a proper decision as far as these orders are.
Nice. And guys, just to expound upon what Jesus is saying about the rollout is that, if you were to scour the tape, if you were to scour the options market for, let's say you see a large position closing and buying, for example, like if that IBM trade where, player closes out March, calls, and then goes for October, you got to sit there and scour for a considerable amount of time on the options chain, all these different strikes to figure out exactly, what really happened. And then by the time that you're able to do that, it might be a little bit too late. And again, we need action that is going to, we provide action that is going to, that sort of finds you a little bit of an edge and find you a push in that stock immediately. Something that is tangible, something that you can trade immediately for solid trades, solid trading opportunities. So that's kind of what we do as far as the action that hits the tape for the private Twitter feed as well as the steam room. All right, so these are some pretty good examples here. Let's roll into some Q&A. We have obviously a big question here, and this is what most of us are asking: can we talk about why these players, would be rolling their position. So Jesus, what would you say to that question there? And then I'll chime in after.
Okay, there are, again, unless we know the individual himself or herself, we don't know exactly what they're thinking. But I'll tell you this, from my experience, the number one reason players roll out of position, okay, and I'm talking about these big professional sharp players, it's their form of profit taking. And I'll give you an example,
Right.
okay? IBM, they'll buy, let's say, the 311 calls like we saw, okay? They'll see a nice appreciation in those calls. Now, what they do is they'll maybe take half that money home with them, sell those calls, okay, lock in half that profit, and put half that dollar amount into further out March calls. Okay, so yeah, they're still bullish on IBM, but at the same time, they locked in the profit, and they're letting some house money ride in calls further out. And another reason would be they need more time. I mean, anything could happen. Even these professional players, I mean, we see them many times get things wrong, okay, as far as timing is concerned. So a lot of times, if something goes on in the market, okay, that they didn't foresee, they'll close out calls and push them further out in time so it allows them enough time to play out. And you will see those are the two primary reasons that I've noticed of why these guys roll out and roll up or down in strikes in positions. Okay, one would be their form of profit taking, and another reason would be looking for more time.
Right, right. Yeah, I mean, I would add on to that is that, we're looking for that we're looking for that initial action. As Jesus was saying before, it's like nothing is going to be as strong as that opening bet. All right. And then once these players roll, so for example, that IBM went all the way out to October and picked a strike 20 points out of the money. Now you're looking at a swing trade kind of situation where you're also going to be long the market, and maybe everybody runs back into a name like IBM. That's too hard to predict. It's too hard to predict entries. It's too hard to predict where you're going to get out on these things. And you have to have a swing account kind of system where you can chase sort of those opportunities, right? So we are more interested in what's happening now, what's going to result in a profitable trade right now. Okay, so let's take another couple questions here. We have Mitchell is asking, what's the $1.05 million bet? Okay, so he's asking on the actual steam room. What are some of the bets that come out here?
Taser.
Right. So right. So all we're doing here, actually, Jesus, you want to explain this?
Yeah, no, I think he's asking what's that $1 million bet. He's curious about the $1 million bet I was giving the example. Taser, Tasr.
Oh, no, no, no. But he's also asking which what does that mean when it says $1.05 million bet?
Oh, is that what he's asking?
Yeah.
Oh, I thought. All right, yeah, no, so that's the dollar amount behind that transaction.
Right.
In other words, a lot of people like to look at the contract amount, okay, and that's great.
Right.
But if somebody buys 20,000 contracts at 2 cents,
right,
I don't even look at that, to be honest.
That's a great point. That is a great point.
So I want to see, and again, it doesn't have to be $1 million bet. I see sharp bets that are, $150,000.
Right.
But the reason why the dollar amount's more important than the contract amount is because the contract amount can be very, very deceiving at times.
Indeed, indeed, and that's a good point. I didn't even understand it until I finally started to see more of the action hit the flow here. Is that when you see, let's say, 165K on a name like VRX, that's kind of that's definitely pretty sizable right there. When you see, for example, Jesus will throw out here 40K on an MOS, that doesn't happen that often either. But if you just see the contract amount, let's say it was a couple hundred contracts here and there, it doesn't really tell. It's kind of lacking. It doesn't really tell you that much. So that's why we kind of throw out the actual bet amount, the dollar amount of that bet, which, by the way, can be easily computed by just taking taking the contracts that they bought and multiplying that by the where they bought it.
And can I make a quick? I just
Yeah,
want to make a quick point, Lucia. Just
go for it.
and the reason I put the dollar amount there is, like I said, the contract site can be deceiving, but it gives you an instant picture, okay, of what type of bet and how significant it may be. All right, so like for example, the Mosaic. All right, $35,000 bet. You may not find that appealing,
Right.
but automatically you know that's not the biggest bet. So maybe that's something you would pass on. So again, the purpose of the details in these orders is for you to get and paint the picture immediately. That's the main focus for us, because options can be very time consuming when you're trying to analyze them, and we just want to make it as quick and as easy as possible for you to paint the picture of what's taking place here. And a lot of some of the hottest action, you have no Friday SDRL, that little driller, started off with measly $40,000 sweeps before that thing just exploded. Okay, so again, these are all things that you will see in the steam room play out. It's not just about one order; it's about the flow and so forth. But I just wanted to give you that example.
Yeah, by the way, that SDRL was completely bonkers, I believe on Friday, and you can see all the action here. Like everybody was in this, everybody was watching this thing. It was one of those dollar names or whatever that just literally doubled in a day, and we literally caught and monitored the whole damn thing right here in the steam room. So we have a lot more questions here. We got OW here, he's currently right now one of the most, I would say, one of the more active members in the steam room. A lot of the action flag seems to be directional, aka premium paid one-sided, and not a ton of callers slash spreads. Is that by design? I know there are a lot of bull call spreads firing off, or put spreads firing off. Just don't see that flag quite as much. Thanks in advance. Jesus, what's your response on that one?
That's a great question. Great question. And OW knows I post a lot of spreads in the room, into the chat. They're not in the alerts, but the reason for it is, unless it's really a sharp spread, in my eyes, it's not tradable right now and then. And the reason why I say that is, I mean, think about it for a second. There are calls, bought and puts, bought and sold and traded all day, every day. There is so much activity out there, okay? I would say 98% of it's completely useless as far as finding momentum right now. I'm looking for the most aggressive type order that can possibly be placed. And I give OW, I give this to you. If you really, really loved a position and really felt that this thing was going to go right this minute, that you needed to own it, are you opening up a call spread? No. Okay? You're going to go in there aggressively, sweep all offers, and just get in the goddamn thing before it takes off.
Right.
So that's what I'm looking for. Now, again, call spreads are bullish, but like Lucci alluded to earlier, that may be more of a swing type trade.
Right.
You might not see that reaction instantaneously. So I hope that answers the question.
Yeah, I'll bring it back to this PXD, one of the most notorious put spreads. I think it was a risk reversal kind of trade, where they sold it. They basically made the floor on this PXD, and I think it was trading around like 108 or something like that, 108, somewhere around there. And this guy sold a crap load of these 100 puts out to September, got an ass ton of premium for it, and then bought 145 September calls. And take a look at where the stock is trading now. It's trading at around 130, right? So this guy smoked it here, and we caught. And Jesus threw out that trade before the shit even happened. So he'll still grab some of these things for us, and which is huge. Like, I traded this thing like a monster. Once finally it started going up to 125 or 126. and this kind of sets the stage for things going forward. But, like he says, this kind of activity too is even tougher to screen for.
Yep.
So we're gonna try though to do a little bit more research on it and see if we can zero in on trades like this, because this trade was special. This PXD trade was very, very special. And I know there's
Yep.
been a lot of other risk reversals that Jesus has called out in the room, that has yielded some serious cash. Um, all righty. So what do we got? Ethan here. When Jesus sends out an alert, that mentions the strike it falls in line with, like he typically does. On the option chain, there are multiple strikes under various expiration dates. Does the strike with the most volume matter more when choosing an actionable trade? So this is a question that we get quite often. It's like, okay, when we get a particular alert here for some options order flow taking place, what should the trader do? Should the trader go into the chain and buy the same damn thing, or should they hop around? Jesus, what do you got to say on that one?
Yeah, we get this question a lot, and Ethan, I can just tell you it. I mean, you have to. Here's the thing, okay, with these orders. The way I'm going to give you my mindset and what I'm looking for when I see these alerts come up, okay? I'm looking at what kind of impact will this have on that underlying, on that particular name right now. Okay, so me, for example, I'm day trading, all right? And I'm day trading stock. So I'm not even pulling up the option chain.
Right.
I'm looking at the orders, okay, and I'm looking for something that will have a reaction or potential momentum right now. And I go in and buy the underlying, buy the common, okay, and I'm looking to trade that. Now, I don't know what type of trader or trade you're looking to put on. Okay, if you're swing trading, I mean, you might want to take a different strike than what was purchased by that Wiseguy, for example. So again, it's really a tough question to answer when I don't know the type of trader or what type of trade you're looking to put on. And Lucci can elaborate a little further on what he does sometimes, if it's a short-term bet or not.
Yeah, no doubt. I mean, Ethan, again, like this is something that we don't. Here's one thing, and I'll say this with all bluntness, because I say it to everybody that hops into the room as well. Like we don't sit here and handhold you. All right, that's not what we're interested in doing here. We are providing you with information that is actionable that you can trade against. Okay, now what you want to do with it, all right, or how you choose to play with it, there's so many different ways you can do it. And for us to manage all these different strategies, I wouldn't have time to trade for myself. I'm trying to make $1,000,000 out here. All right. So at the end of the day, I'm not concerned here. All right. With what strategy you are actually picking. All right. With that being said, let's take an example here on this Netflix. Right. So Friday we had in the morning, somebody hitting these March 99.5 calls. Right. So if you actually go back to let's say the chart here, there's a numerous things that you could have done, right? So that action happens right off the open, and you also have a bullish move in the market, and some people were definitely trying to sit there and pay up for Netflix. Netflix had a huge move. Now, do you have to sit there and play the weekly that guy played? No. Now, obviously, there's tons of options here, and to be honest, any single option that you chose for that particular trade would have resulted in a pretty damn good trade. Every single one of these calls, provided they weren't too far out of the money, looked pretty good. Now, these are weeklies that closed this week. If you wanted to play, let's say, a monthly because you don't want to play weeklies because you think they're a little bit too volatile, that's fine. And maybe you come out to these monthlies. These things also move pretty well too. Okay, so if you want more risk, you go with the closest expiration. If you want less risk, you go with a farther out expiration. Okay, if you want even less risk, you go further in the money. If you want more risk, you go further out of the money. Okay, so these are questions that an options trader needs to understand in order to figure out what the best trade for him is. If you don't understand those things, you got a little bit more practice to do, and you need a little bit more experience. But you'll pick that all up. You will pick that all up in the steam room here. So what else we got? What else we got? Let's take one more question here. Louis B is saying, is there a glossary link for the Wall Street Jesus terminology? Wiseguy, sharps, Bazooka Joe, sweep, and steam. Yes, absolutely there is. Jesus, I think it's all on your website, no?
I don't know if it's there anymore. It used to be on the front page. I don't think it's there anymore. But we'll get something. We'll get something out there. I mean,
Nice.
wise guys, Lewis, and sharps are basically the same thing. I mean, wise guy is a gambling term used for smart money. So wise guys and sharps just means professional players. Okay, professional money. Now, all the rest of the terminology I use is basically my Brooklyn slang, which is nonsense. But when it comes to, I mean, that's a very popular question I get regarding wise guys and sharps. Just think about that as the sharp money out there, the smart money out there.
Cool. Cool. All right. Actually, we'll take more time. We'll take one more question here. We'll take a couple here. Wen is saying, I signed up for the Steam Room trial, but I don't see the Wiseguy alert. See only the tweets. How can I log in the Steam Room? Okay, what you need to do is make sure you email Greg at sayinglucci.com. And dude, check your emails. Like, all these instructions are there in your emails. So if you signed up for the Steam Room trial, you're going to have a login, and that's going to be able to get you into this particular room. And then all you want to do to get the alerts is just click this little icon here on the right, and that'll get you all the alerts. If you can't get in here in the first place, there could be something mess up with your password or something like that. So email Greg at sayinglucci.com, and we will get you set up by Monday. And make sure that you have a couple of extra days on your trial if you weren't able to access this as well. All right, so let's take one more question here. Mitchell is saying, what does multi-sweep mean? All right, so he's taking a look at some of the flow here, and he wants to know what the multi-sweep means. So what does that mean, Jesus?
Basically means that particular player, that order, he swept multiple exchanges. I'll let Lucci get into the type of exchanges out there,
Sure.
But basically, when you see the difference between sweep or multi-sweep, just a regular sweep might be he swept all offers, okay? Multi-sweep means he swept many exchanges to get that fill. So basically telling you in simple English, it was extremely aggressive. I'll let Lucci get into the details of it.
Yeah, so all right, so anytime you're looking at a level 2 on a particular on an option, let's say. So I don't know if this is going to work right now, but yeah, so these things are closed right now. So anytime you're looking at an option spread, that you're going to have offers, and then you're going to have bids, right? Now, you're going to have several exchanges quoting prices for for a particular bid or offer. So just because on a level 1 you see the bid is 250 by 258, when you go to your level 2, you're going to see several different exchanges quoting different sizes for 258. Okay, and then subsequently, at 260, 265, 270, wherever the hell else, right? And now all these exchanges, the big ones are your CBOs of the world, your ICE, your ARCA, your NYSE, your NASDAQ, I can sit here and list all these exchanges. Now, a sweep order, and this is one of the secret sauce here in what Jesus is able to do. A sweep order means there's a player that is that aggressive that he's just trying to take every single exchange. He's not trying to light up one exchange. He's just saying, dude, sweep the book, sweep the offers. Give me whatever the hell is out there right now. And that's why some of this stuff, that's why, a large percentage of what Jesus posts here are actionable trades. All righty. Let's take one more here, and then we'll call it. Joe is saying, so would it be fair to say if someone was selling calls, would I necessarily see the stock take a hit or big downtick on the chart, as opposed to a big uptick if they were buying to open a call position? No, Not necessarily. Not necessarily. Jesus, I'm gonna let you. I'm gonna let you take that one.
Well, I got two answers for that. One, if it's something that's posted, and I don't mean this in an arrogant way, but if it's something that I post in the room, okay, that means it was probably sharp enough or significant enough that you probably will see a reaction if those calls were sold to open,
Right.
okay, if that's what he meant. As far as closing positions, you're not going to see much of a reaction. I mean, people take profits, sell for numerous reasons, but if they were sold to open and it's an order that I placed and thought it was significant enough to mention to members, you will see a reaction to the downside, yes.
Nice.
But again, other guys, I just want to make the point. Other transactions that take place, you don't see reactions. I mean, there's a reason why I label this Wiseguy action, and that's why you see that reaction. It's the market makers kind of getting a little nervous and hedging off their bet. They basically don't want that bet on the book because it's placed by a sharp dude. So I don't want you to get the picture that there's a reaction off every transaction that takes place in the option market. It doesn't work that way.
Okay. Okay. All right, guys. Let's close it up for today. Again, you guys know the promo here. This is just for these webinars. Anybody who is registered to these webinars is able to access these webinars at a later time. I sent you the link as well. So it's just the Saturday Sweep webinars link. You guys have all that with you right now. You guys are eligible here for anybody who's not currently in the Steam room to get a nice trial here for a month for just $50. Currently, the price for the room is $225, so you get a nice steep discount for the first month. And then following up, you'll be rebilled for $199 a month, so you're still getting a nice discount. And again, it's good value here as far as what we are able to provide, as far as what to trade, when to trade. The how to trade is something that you need to figure out as you kind of go on, because again, there's a lot of the aspects about trading that is very emotional, very personal. Things that take a little bit of experience to figure out, and I think we'll do some subsequent webinars on some of those aspects of trading. But right now, we just want to focus on the Steam room and the value in the Steam room. So again, guys, you're able to get that value for $49 for the first month. Just go ahead and use the link I threw out you to sign up, and hopefully we'll see you guys on Monday in the room. For all our existing subscribers, you guys know how to get the previous webinars. If you don't, make sure to contact us, Greg at sayinglucci.com. He's our admin. He'll take care of you, anything you need. And also you can just email I believe it's info at sayinglucci.com. How many people are in the room? I mean, I don't know. We got 100, 200. I don't know. There's probably like 250 in there. I have no idea.
Yeah, I think it's over 200.
Yeah, and not everybody is in there every day. You know what I mean? Like people are active elsewhere. They want to cop in, and the cool thing about the Steam room too is that you can search for a lot of stuff. You can search for activity. You can scroll through all these alerts here, see what's going on. And you can scroll through too. Certain people that you just want to follow that you feel like have a good read on the markets. And things like that.
And
All right,
a lot
guys.
more coming. And a lot more coming.
Yeah, that's the other thing. We're always working to refine, what we're feeding you guys. We're always working on our technology. So this chat room is going to continue to get more and more robust, more helpful for our traders, for our community. We currently have developers, programmers working on new initiatives to roll out to you guys. So this is a good community to be in as far as what to trade. When to trade, and we are going to work on the how to trade for you guys. We also do have a class as well. We currently don't sell it right now, but if you want, if you need an advanced sort of methodology class and you're really kind of beginning and you really want to, kind of get that next step up, we do have a class that we do sell. It's not listed on the site or anything, so be sure to contact us if you're interested with that. All right, guys. Let's call it there, and we'll see you guys. Hopefully, we'll see you guys. Oh yeah, actually, I got my sales guy here, Jeff at sayinglucci.com. If you guys are interested in the class, that is very comprehensive. It'll teach you tape reading. How to freaking buy an option, where to buy these things, how to deal with spreads, a lot of this stuff. So again, Jeff at sayinglucci.com. He'll hook you up. All right, guys. Take care, and hopefully we'll see you guys in the chat.
Yep. Thanks for coming, everybody.